What's good, y'all? It's your boy Ali, back at it again with another video. And today I'm going to be talking about how to read candlesticks. All right. So this is a very, very simple thing to do. I understand how it can be intimidating whenever you've never read a candlestick chart before. Nobody's ever explained it to you. But hopefully after this video, you know what? Definitely after this video, you will understand how to read a candlestick and what you're looking at. You'll be able to begin your journey of reading charts and being able to make decisions based off of reading price action. All you're doing when you're looking at a candlestick or any chart is you're reading the behavior of the buyers and the sellers. All right, the buyers and the sellers are pushing the price up and down, up and down, up and down, and it's being reflected on the screen with these green and red candlesticks. They can be changed into different colors, and the colors don't really matter. It's more about the anatomy of the candlesticks and the characteristics. So enough yapping, let's get into it. All right, so candlestick anatomy. This is all right. This, bro. All right, so candlestick anatomy. This is very simple. Very simple. Each candlestick only has 4 components to it: a open, a close, a high, and a low. The only thing that makes this candle green is that the close is above the open. The only thing that makes this candle red is that the close is below the open. Okay? So when you're looking at these candlesticks, each candlestick represents a period of time where a price is moving up and down. Okay? And why is price moving up and down? Because buyers and sellers are moving the price up and down. A market is just a place where buyers and sellers come to interact. All right? And these candlesticks is just a visual representation of the behavior of these buyers and sellers within a specific period of time. You can choose what period of time you want to analyze this behavior. That is up to you. That is not what I'm going over in this video. Actually, I might. We'll see how long this is, and then I might. All right, so for just example purposes, let's just say each one of these candles represents 5 minutes of time. Okay. All right, so the bottom of the body of a green candle is the open, and the top of the body of the green candle is the close. Nothing changes when it comes to the highs and the lows on a green and a red candle. Remember, it's just the open and the close that changes. On a red candle, the open is at the top of the body and the close is at the bottom of the body. Okay, so let's do it like this. Let's say we're in a farmer's market, all right, and we're buying apples. Let's say when the market opens at 8:30 down here, the open, let's say it opens at 8:30, the price of the apples is $50, okay? Let's say price came down here to its lowest point at $10. It went all the way up to its highest point at $150, and then it closed here at $100. So from the time that the apples started being traded at 8:30, the price went higher and it closed within that 5-minute period from 8:30 to 8:35. It closed higher than it opened. So that's why it's green. When you see green, think buyers. When we see red, think sellers. Okay. Bullish candle means up. Bearish candle means down. What does bullish mean? Bullish means that you're betting on the price to go up, because why? When a bull strikes with his horns, it strikes up. Okay, that's it. Very simple. When a bear strikes, it strikes down with his claws. All right, that's all that it means. It's very simple. So this is a bullish candle. When you see a green candle or you hear the term bullish, you're thinking up. When you hear the term bearish, you're thinking down. And just think of those references. Bull strikes up, bear strikes down. All right, so let's read the red one just how we read the green one. All right, so price opened here, closed here at 8:35. Let's say this next candle, it opens at 8:35, and from 8:35, it went from, what do we say this closed at? What, $100? Let's just say it opened at $100, exactly where this candle closed at. It went as high as $150. All right, it went as low as $20, and it closed back at $50 down here. All right, so it opened at 100, closed at 50. So from the time that it opened at 8:35 to the time that it closed at 8:40, the price went lower. So that's why this candle is red, because there were more sellers than buyers in this time period. If it's green, there were more buyers than sellers within this time period. And that is it. Essentially, all you're doing is you're looking at the behavior of buyers and sellers from a macro perspective, so a higher time frame, let's say the daily time frame, and then you want to use a magnifying glass and you're zooming in to smaller time frames, let's say the hourly, the 15-minute, the 5-minute, the 1 minute, and you're looking at price through a refined viewpoint and you want to basically place your bets when the price is low. You want to place your bet on it going higher if it's in an uptrend, and if it's in a downtrend, you want to place your bet that the price is going to go lower. And you're just using the information from these different candles from different time frames in order to do that. All right, so let's hop on a real chart right quick. Okay, so we're gonna start from a higher time frame. You can see up here, capital M is 1 month. So each one of these candles represents a month of price action, a month of behavior between buyers and sellers. Okay, so this month that we're currently on is January, obviously. So I just put a box around this month. Now let's go down, zoom in to the magnifying glass on a weekly time frame, and all it's gonna do is just show us more information. More information how? By just giving us more candles. Instead of each candle being a month, now each candle is a week of time. Okay, we can drill down to the daily. I'm not changing the box. All I'm doing is zooming in. Okay, we're just getting more information. And what time frame you use is completely up to you. That's completely up to you, and it just depends on what your eyes are drawn to. Some people are swing traders. A swing trader is when you buy or sell a certain stock or whatever on one day, and then you buy it back or you sell it back on another day. A day trader is somebody that buys and sells in the same day, or that sells and buys in the same day. All right. Now, the higher the time frame, the further out you're going with your trades. So usually swing traders use higher time frames like the 4 hour, the daily, the weekly, the monthly. More day traders use the hourly, the 15-minute, the 5-minute, and below. Okay. So all I want to show you is how you're just reading the behavior of the buyers and sellers within specific periods of time. Okay. Now let's just run through this little series, this whole little series of candles. Okay, we're just gonna read price up and down. Okay, so let's start from here. Start from the beginning of the gray box. Keep it nice and simple. All right, remember the 4 characteristics: open, close, high, low. On the red candle, the open is at the top of the body. Notice this candle doesn't have a big tail or a big wick. Right, the bodies of this candle are the open right here up top and the close down here, and the wick on this candle, this is the lowest point. The highest point on this candle is the body. Okay, the highest point on this candle is the body. There's no long wick like this one. Not every candle is going to look the same, as you can see. Okay, so we opened right here, we closed, we went as low as this point down here, and we closed right here. The next candle, boom, we opened near where the previous one closed. We went as high as this point, as low as this point, and then we closed right here. Next candle, we opened near the close of the previous candle, went as high as this point, as low as this point, and closed right here. Next candle, we opened down here near the close of the previous candle, went as low as this point, as high, maybe that's in the way, as high as this point, and then we closed right here. Next candle, this one opened up above where we closed on the previous one. It opened, it's called a gap. We gapped up, went as low as this point, as high as this point, and closed here. And these are whole days of price action. So within just these candles, you can zoom in, and ideally, if the candle is green, if the daily candle is green, you will want to put your bets or take your trades and basically say, all right, I want to see the market go higher somewhere in the lower part of the candle so that you can catch the move up, and vice versa. Ideally, if the daily candle is red, you want to make your bet at somewhere near the top of the candle and catch the move down. And essentially that's all you're doing as a trader, as an investor. That's all you're doing. That's all you're doing. You're taking a bet on whether the price is going to go up or down from where you interact, from where you place your bet. Okay, let's go to the next candle. We open near where the last one closed. Top of the body of a green candle is the close. The top of the body of a red candle is the open. So we opened near the previous close, went as high as this point, went as low as this point, and closed here. Okay. Next candle, we opened near the previous close, went as low as this point, as high as this point, and closed here. All right. And so forth and so on. Hopefully you understand how to read the price now. And once you're able to see, okay, we made a high here, we made a low here, you will begin to see different patterns within the market. Okay. You'll begin to see different patterns. Everything that's on this chart is information. Everything. I drew this box just to show you guys, but everything on this chart is information. All you're doing is you're trying to find patterns that allow you to take advantage of the price fluctuations within a specific period of time. That is the most simple way to put what trading is. Now, there's 1,000 different ways to do it. Don't let anybody tell you that their way is the absolute best way and any other way is not correct. They're lying to you and they just want your money, and they probably don't make money. So that's just a heads up. And yeah, hopefully you understand how to read a candlestick now. You understand what you're looking at, and you can just start your journey of learning how to read charts. And if you have any more questions, put them in the comments. I'm not going to be able to cover every single thing in one video. I'll be on here forever. It's a lot that comes with this, and there's a lot of different ways and different concepts to go over, but obviously I'm going to make more videos on different concepts. Just make sure y'all are commenting, man. I can respond to all my comments. My videos are doing well. I've been appreciating the love y'all been showing. My last video did 1K views. The video before that is about to hit 2K views, and I was just averaging less than 20 views. So I really appreciate the support. Let me know what y'all need in the comments, because I will literally make the videos based off of what y'all put in the comments. That's what this video is. Somebody asked, oh, how do you read a candlestick? And then I saw it 2 or 3 more times. So I'm like, all right, this video just needs to be remade. There's people that need to know this. So yeah, with all that yapping, man, that's going to be the end of this video. If you liked it, show some love. If not, tell me why so I can be better. And that's going to be it for the video, man. Peace.